Hey everyone, this is Kevin the Apptrepreneur, and if this looks like it was originally a live stream, yes, it is a live stream. But let me assure you right now, well, you'll also be assured when you see the timestamp in the corner on the thumbnail. This is not a terribly long live stream. This is going to be a short one because I wanted to do the videos today, get the news stories out there, but I was really tired last night, ended up going to bed early, had a very, very good night's sleep. Best night's sleep I've had in almost pretty much the whole week, to be perfectly honest. But let's talk about the news story, because this is a particularly difficult one. Then we'll do like a quick little Q&A, and then I'll be on my way. This probably won't be more than 15-20 minutes. I usually say the important part is in the first 15-20 minutes. This one probably won't be longer than 15-20 minutes. But anyway, according to CNET, Lyft sued by investors over sinking stock. The ride-hailing company's share price has dropped from $78 to $58 since its IPO kicked off. This is, and I'm just going to be frank up front, I actually am siding with Lyft on this one. I'm totally siding on Lyft on this one. But let's look at this. It talks a little bit about, see, I'm not going to read too much of the article since you can't read it with me, but it talks about how, like, it opened at $87, close to 78, but then it went down to 69.01, then it went down to 56. What's it now? Let me pull that up today. Okay, right now at this exact minute, hello, it's $58.36, which is better. It's not the low. We'll put it that way. It is not the low. The lowest it got was $55.82, I believe. So it's going up a little in the last couple days, but still, it's lost roughly 31% of its value, which is not great. But because of that, on Wednesday, investors filed two separate proposed class action lawsuits against Lyft. They allege the company misrepresented its market position when it went public, saying it dominated 39% of the ride-hailing market when it might actually be less. Actually, I think that's probably a fair assessment, but whatever. The cases were filed in San Francisco State Court, where Lyft is headquartered. So, here's the thing. That's pretty much the long and short of it. But why the lawsuits? And here's the thing. This is not an unusual thing. I do believe they own roughly 39% of the rideshare market. But when you say own, what does that mean? It's like, yeah, about that much people use it, but does that mean you're going to be making money off that 39%? You see, this is what people, when Lyft and Uber is going up, this is what some investors were trying to warn other investors about. Like, hey, yeah, people use these services in the billions, in fact. They bring in billions of dollars. They also lose millions of dollars. They don't have profits. They're saying right now they're not profitable. So, and that's kind of where we are right now. People are realizing that the companies aren't profitable. And here's the thing. Yeah, you dominate 39% of the ride-hailing market, but when you've got two companies, that's not saying much. It means the other company is doing it better. And the other company might be able to hold out until they can, catch up. So what's really going on here, and this is what it comes down to, because, by the way, I've seen this before, especially seen it was this. This is a case where investors made a bad investment, and they don't want to admit they made a bad investment. So they don't want to admit that they probably dumped a lot of money. And I see someone saying it is possible to profit on just 5% commission margin. Yeah, it is, but they're not doing it, and they're not doing it for a number of reasons. But stocks are not a guarantee, as someone else so pointed out. You invest in the company, and you hope it goes up. but it sometimes goes down. In fact, it usually goes down. It usually goes up and down, and that's why people say the best investors are the ones who aren't reactionary, the ones that look at long-term potential growth and substance, and they buy low and they watch it go high. And while they're waiting for it to go high, it will go down a couple. I mean, look at the Disney stock. Disney stock isn't going up, 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 up every single day. It goes down, it goes up, and some days it goes down quite a bit. Now it's concerning when it goes down like more than 10%, which Lyft has done on a couple of occasions, I'll admit. But that is not Lyft's fault, because once they're public, it's kind of up to the general public to make that stock valuable again in use of using the product, in terms of investors buying the stock and investing in it. And Lyft will always make claims to, get you to invest. And so they said, hey, about 39% of the ride-hailing market use our service. I don't think they're lying about that. I don't know if you could definitively prove it, which might be the only case where this lawsuit has merit. I mean, that's also probably why they went after it. But I think everyone, especially with two functioning brain cells, will know that Lyft is the number one rideshare service after Uber. And that's a good title to have. And they wanted you to invest in their company because they needed more capital to be brought in. So some investors heard about this. Hey, this could be the next unicorn. This could be the next $2,000 share stock. Bought a bunch of it and saw their stock crater 31% in a couple days. Now, here's the thing. It might come back. You never know, because, again, there are companies like Facebook and Twitter. They have cratered and come back much, much stronger than before. In fact, that's why it's usually good to wait a year after an IPO before you invest. Because the thinking is, if it craters, the first year it'll crater the worst. But after a year, you will have an idea what the business model is. You'll have a better idea of where the company is going, and you can decide whether you want to invest in it or not. Now, even if it goes up in a year, here's the thing. It's usually still climbing after a year. So yeah, you're not getting it as cheap as you would have if you got on IPO, but you're still getting it fairly inexpensive. And in another year, it will usually have doubled at that point. So waiting a year before investing in any IPO is usually a wise move, in my opinion, and in other investors' opinion. These guys decided not to wait a year. They wanted it right away. And after 2 weeks, they see a stock that is consistently falling for the most part. And it doesn't seem to be having a lot of hope of actually reaching that unicorn status. So what do? They sued Lyft. I mean, MoviePass was sued when they weren't profitable. Of course, then it turned out that they did things like lost information and stuff. So, there was probably a bigger reason for that lawsuit to happen. But at the end of the day, the shareholders lost money. Therefore, they are suing. So Mike says in 2009, Apple stock was $79 a share. You know what? In 1996, I think it was like $1.25 a share. I mean, how many of you would love to put like $3,000 into Apple stock at $1.25 per share? I mean, Apple was priced to go bankrupt at one point, and you could have bought like $3,000 worth of shares. Hi, Ed. And had you been willing to wait a good 30 years or so, you'd probably be a semi-millionaire at this point. Who knows what it would be now, because it's split a couple times. But yeah, so I actually support Lyft. Not that I necessarily, I don't want to say support Lyft. It's kind of weird, but this is not Lyft's fault per se. Lyft wanted to raise some money. They went public to do so. It's not doing as well. And I do think at one point the stock might potentially go to zero. I don't think Lyft or Uber have sustainable models unless they make some changes. And as we just talked about in the MoviePass live stream, there's a pitfall to actually, how should they put it? There's a pitfall to charging what your service is actually worth when getting people accustomed to the unrealistic pricing expectations for so long. Someone just asked me if they should put their $500 bonus into the IPO. My suggestion is no. If you want to buy into the companies, put it aside in a savings account, wait a year, see where the stock is at that point. And whether it's low or high, if you still want to invest, you have a lot more. So, that's what I recommend anyway. So, okay, we've got about 5 minutes. See, I told you this would be a short live stream. Does anyone have any questions about this? But yeah, I mean, I wouldn't put any of your IPO money into stocks. Well, if you're going to put into stocks, I put into something else. Here's the thing: if you're going to spend $500 in let's see here, what's Disney trading for? I know Disney's trading for a lot. Disney's $132.45 a share right now. They are growing probably, and they will probably continue to grow. That'd be a good investment. Coca-Cola, right now $47.48 pays dividends, is growing. What about Microsoft? $123.37 pays dividends, is growing. If you want to put your IPO money into stock, I'd recommend stocks like these. And, there's a few reasons why. First of all, they're continuing to make money. You get paid dividends. And here's the other thing. These companies are unlikely to go out of business anytime soon. I will occasionally buy a stock from an unproven company, because once in a while you have to do it. And I've lost a few times on that. But then I've also won a few times on that when those unknown companies were Google at the time. But in general, when it comes to investing, some of the tips that I encourage people to have, some of the tips that I have is no more than 2% of your portfolio for each company. So diversify quite a bit. Typically invest in stocks that are not going to go anywhere. Like, invest in companies that are pretty rock solid for the most part. Try to keep 60% of your investments at least that. Then the rest you can do with companies that might have potential. And a 5-year plan. Invest for the 5-year plan. Don't be buying it hoping that it's going to go up a lot in a couple of years. Buy it in hopes that it's going to come up a lot in the long term, because that's typically how it goes. Like, for example, one company that I do have stock in, but I'm conflicted about letting people know about, that is Netflix. You saw them get creamed just a week ago, about 5% of their company, just because Disney announced a streaming service. I don't know yet if Netflix is going to be long-term sustainable. That's how fickle the market can be. But I wouldn't have any issue investing in Comcast, because they've got movie studios and cable companies, and they've got a streaming service, and they've got enough assets where I would be comfortable investing in them. So that's a little bit of advice, and that's, now again, I will probably, I keep putting this off because I just see the stock go lower and lower. Before the end of the year, though, I will buy a share or two of Lyft stock, just so that when people say, why do you complain about Uber and Lyft? You don't drive for them anymore. Be like, yeah, but I own stock in the company, so I care. It's just as good of excuse as any, but the more I see it go down and down, the more I'm willing to wait that one out a little bit. So, anyway, yeah, Blockbuster at one point could buy Netflix for $1 million. That's one of those hindsights are 2020 situations. But anyway, so, and apparently Larry was an ex-financial advisor. Let me see, did I miss any comments that might be interesting? So like Larry says, you are not a financial advisor. You just let yourself owe for a lawsuit if anyone takes. No, Larry, that's not true. That's not true. I mean, granted, no, I don't do financing for a living, so, take that for what it is. I mean, if you come to me and you say, hey, I took your advice and I lost it all, it's like, well, no, that's not something I would recommend, but Like, this is saying what I do. This is what I do. You know, my portfolio, no more than 2% per company. 60% of the companies are companies that I am fairly confident will not go anywhere. And I plan for a 5-year investment. I don't look for the short term. That's my personal investing advice, and it's worked out good for me. But if you want true financial advice, then yeah, go to somewhere else. But if someone says, you know, ask me my opinion, should I put my IPO money, my bonus money into an IPO? It's like, I wouldn't put it into Uber's IPO because I think you'd be throwing it away for them potentially, because I've got very big concerns about Uber and Lyft even making it. That's what I'm saying. You know, put it into like Coca-Cola, Disney, Microsoft. You know these companies are going to be around in 5 years, or you've got a pretty good idea they're going to be around in 5 years at the very least. I mean, anything could happen. I mean, that's why I'm kind of cautioning people against Netflix. I mean, you know, I saw Netflix stock just get hammered because of Disney's streaming service announcement, and they might get hammered again because a lot of people are going to cancel the service because of the $2 price hike, which to me is not a big deal, but I know someone who actually said he was going to go back to pirating things, which it's like, it's amazing how entitled people can get. But anyway, yeah, you know, no, I'm not a professional financial advisor, but that doesn't mean I don't have the right to talk about it. So, you know, and since I'm actually not telling people to actually put their money into something, what would they sue me for? Seriously. It's like, well, he recommended I buy Coca-Cola. It's like, well, I recommended that would be a better option than Uber in my opinion, but it's still my opinion. So there you go. But yeah, I am totally allowed to talk about finances. This is a YouTube channel, especially since I'm not doing it in any legal capacity. It's a YouTube channel. It's a personal opinion. So, well, yeah, Netflix got hammered because they missed their number and because of the streaming service. Well, also, Netflix is going to get hammered in the future because I don't know how much higher that number can grow. I really don't know how much higher that number can grow. Almost everybody has Netflix, and they need to maintain their growth for the next few years as they spend $8 billion on content to stay sustainable, and they're losing money as it is. So Netflix has the potential to be bought out or go under. I mean, the thing is, they do have assets. Having their own content is good for them, but here's something to consider before you invest in Netflix. I believe their top 5 shows are not Netflix created shows, and their top 2 shows are Friends and The Office, which are owned by Comcast and Warner Media, and they want to make their own streaming services. So that's kind of a scary thing. So anyway, do we have any final questions? I can take one more question, and then I'm gonna have to end this. Will your roommate be vacuuming again today? Yeah, that's annoying when he does that, isn't it? But I don't know. I mean, yeah, he got this new little portable vacuum, and for some reason has been enjoying using it. So anyway, for those of you who do want to invest in stock, I will say, if you click on the Robinhood link below and sign up for them through me, you will get a free stock to begin with. It might be a Snapchat or a Groupon stock, but it could also be a Google, Apple, or Microsoft stock. So I'm just going to throw that out there now. After you make your first stock purchase, you'll get like a free stock for signing up through me. So whatever you decide to invest it in, that's free money for both of us. And aside from that, we're going to end this live stream, and I'm going to get the day started. For all those who were not watching this live, what do you think? Do you think that the investors have a right to sue Lyft? Do you think that they shouldn't be suing Lyft? Do you think it's petty? I would love to know. Comment below. Like, favorite, share, subscribe. If you enjoy my videos, consider becoming a Patreon member. It's totally optional, of course, but even as little as $1 a month goes a long way, helping the channel run smoothly. Also, you get access to my Patreon's exclusive blog. And if the gas prices are bothering you for how expensive they're getting, check out the Get Upside app. It's totally free, and you get discounts on gas pretty much across the nation. Deb, I think you can email me later if you want, but anyone who's been watching my channel or any of the other UberTuber channels for a while pretty much know what people want from a rideshare platform at this point. It's really not complicated. Just better pay, flexibility, destination filters, scheduling, tip option, stuff like that. But as long as you pay better, that should be fine. Where was I? Oh yeah, check out the Apptrepreneur Vlogs channel. And because that's still growing. Yeah, Deb, I'm wrapping this up. I can't have time to talk about this now, but maybe we'll talk some. But Sunday is when at around 8 p.m., 8 to 9 p.m., that's when I do my regular live stream, and those live streams tend to go for quite a while. That would be a much better time to bring this situation up, because not only would I have time to answer it, but you would have like probably over 100 people in the chat who would be willing to give you advice on that as well. Right now we're kind of early, so that's why there's only like a couple dozen people. Oh yeah, also finally check us out on Apptrepreneur Hangouts, which you could do that too, and you could ask people there. It's on Facebook, and as always, flame responsibly. Have a good one. Thanks for joining me this morning, folks, and have a good day.